Are you having trouble raising money for your startup? Here are 3 reasons why and how to fix them immediately. Hey everyone, it's Chad Pavel here, helping entrepreneurs start, fund, and grow better businesses and save money as well. This post, we're going to show you 3 reasons why your startup fundraising campaign is failing, and most importantly, what you can do to address those problems right now. So the problem that I see a lot of the times with especially first-time entrepreneurs is they really have no strategy when they go to raise money. And even though they might have a really cool or promising product, they might have a great team, they might have a great LinkedIn profile or resume, they have a great deck together, why do so many businesses, particularly startups, have trouble raising money? And even if you think you're running out of time, like the world is going to steal your idea, or if the time to pounce on this opportunity is right now, you still have time, if you're alive, if you're still around, to go and raise money after you fix these problems. So the first reason you're probably failing in raising capital is you have a weak story. So it's really easy for us as entrepreneurs to get wrapped up in our own story and kind of have everything in our head. And it can be really difficult to take what's in here and put it on paper into a cohesive, coherent pitch that makes sense to a complete outsider. Now, as a startup founder, especially if you're building something brand new that no one's ever done before, you need to get crystal clear on things like, who are you? What's the addressable market that you're serving? How big is this problem? How much will people pay to have this problem solved? Why are you qualified to offer this solution to solve the problem? And I think most importantly, how will this translate into a viable investment opportunity for a brand new investor you've never met before? And most importantly, why will this translate into a great business opportunity that'll make your investors a lot of money at a relatively low risk point? So as you start to tell your stories, first to yourself in front of a mirror, in front of an iPhone like this, you should then start to think about, does my story make sense to anybody I talk to? The first way to start to simplify your story is to break it up into 3 parts. And I like to use the format that we've listed below, and it starts like this. We solve a particular problem for a particular group of people, and we make money by doing it like this. So that 3-step process is really simple, just to start to think about your story in a way that makes sense to a complete outsider, and even to someone you've been talking to for a number of months or years. So here's an example. Let's say you help dentists in the United States get more clients. Your pitch might go something like this. I help America's 100,000 dentists get 10 new patient leads every single week using Facebook advertising, and I charge them $1,000 per month as a retainer. That's a very simple pitch, and anybody can understand that. And when they think about dentists, next time they meet one, they might be thinking, oh, that guy serves dentists and you can help him get more money. Maybe I will refer that person over. And another example is, let's say you're building software to help dog walkers get more jobs. Your example pitch might go something like this. We build a social media platform that helps dog and cat walkers, if those do exist. We help dog walkers get 10 new client leads per month using our social media platform. We charge them a subscription and a per job fee, and we think this business can reach $100 million in revenue in 5 years. That's a really simple, clear pitch that adds a little bit more detail than the other one, but anybody can understand that, and if they're interested, they'll start asking you more questions, and you can start to dive into the details. Make it simple, make it very, very clear what you're doing, and break it up into 3 or 4 value points that anybody can understand if you tell them in an elevator, at a cocktail party, at a pitch event, and you can gauge their interest very, very quickly. Number 2 reason why you're having trouble raising capital is you haven't done or proven anything yet. Ideas are a dime a dozen. In this day, when everybody wants to be an entrepreneur, it's very easy to kind of fall into the trap of being just like everybody else. And at this point, what you can do to prove that you have something worth investing into is to show proof that you've already built something and that there is demand for your product. So while anybody can create a pitch deck, anybody can talk the talk, there's nothing that proves more that you're onto something big than getting customers to pay you. And there are some other things that are a little less concrete, but they will help you prove that you are doing something worthwhile. Some things you can do if you can't get paid customers right off the bat is you can gather testimonials from businesses and from individuals who say, yeah, if John can build this solution, I would gladly pay him $100 a month to solve this problem. That's pretty good. Next is you could set up an email subscription or landing page, and you can run advertisements or get some free press by posting on social media, by getting some press releases in the news, and direct people towards that landing page to enter their name and email, thus proving that they want to see and possibly buy what you're building. Another thing you can do if you're building a new technology or physical product is you can share the mock-ups or the prototypes or the actual physical thing that you're building, even if there's only one of them and you don't have the million that you want to sell. If you have something in your hands, whether it's a drawing on your iPhone or even on a napkin, or 3D renderings that you can purchase for a couple $100s online of the new physical product or real estate development that you're building, get something somewhat tangible that you can show or send to a potential investor to get them to visualize and hopefully have an emotional connection to what you're looking to build. And you don't need $1 million to build most prototypes. And you definitely don't need $1 million investment to build a drawing or a mock-up of your software or your new technology. If you put yourself in front of the right potential investors and you have that great proof of concept, again, whether it's a drawing, whether it's a live demo, and most importantly, if it's already customers who've prepaid you to build what you're telling them you're going to build, those couple of different things will prove to an investor that you are an entrepreneur and that you know how to make stuff happen. Number 3 reason why you're not able to raise capital, you have weak presentation materials. Now, most entrepreneurs will start by building a huge financial deck, a financial model, an investor deck. They'll put all these materials together before they do the other things like trying to get proof and trying to actually build something first. So again, I recommend go and build something first. Go and prove something first before you start approaching investors. You can do it nights and weekends. You can very likely interview potential customers if you don't have any money yet. You can do that for free. You can do it in your spare time. So you should be starting with generating proof of concept and proof of demand before you build any materials. But once you've done all these other things and you're ready to start approaching investors, whether they're friends and family or organized groups or angel investors or even venture capital firms, you then need to build your presentation materials to support your investment thesis. So there are 4 primary documents or material types that you need to prepare if you're raising money from investors. The first is an executive summary or a teaser. That's a 1 to 2 page document that outlines the overview of the business opportunity, how big the market size is, the problem you're looking to solve, the proof that you've already built something, a description of the product, and then all the financial details that will entice a potential investor to invest in your business. Next, you need to build an operating financial model and projections. At the very least, you should be showing 3 to 5 years of financial projections if it's a brand new business. If you've already been in business and it makes sense, you can show some of the historical years. But you want to show in a financial model, typically built in Microsoft Excel or Google Sheets, you want to show an investor how much money you can make them if they give you their hard-earned capital, right? You want to show an investor how if they give you $10,000 that you'll turn that into 3, 5, 10, or 100 times that money by investing into you right now at this point. So your financial model needs to support that entire thesis. It needs to show the revenue, the cost of goods sold, your investment into building the solution, marketing and sales, hiring, HR, and again, you need to show them the financial returns that they can potentially get if they invest into your business. The third document you need to prepare is a professional investor slide deck. Now this slide deck will be between 12, 15, sometimes 20 slides or so if it's a really big opportunity, and it will walk through the details of your business model. Think of it like a business plan, but crafted into a way that makes sense and that you can actually put up on a board and a projector, and you can walk through live just like this and pitch your opportunity to people in a cohesive, logical storytelling sense. So you need to build an investor deck if you're going to be pitching angel investors and certainly VCs for your business opportunity. And last but not least, you need to know the terms of the investment that you are seeking from your investors. We always recommend you check in with a business advisor or a business attorney to craft the term sheet that you're going to be offering to these potential investors. Now these days, the SEC and FINRA have a lot of different restrictions and criteria that you need to meet if you're raising capital from investors outside of your initial circle of friends and family. The last thing you want to do is get yourself in trouble with the SEC by generally soliciting or posting online, hey, I'm a startup, I'm building this, and I want to raise $500,000 from anybody and everybody. You can't do that. So make sure that you check in with a business advisor, another entrepreneur, and most importantly, a business attorney so they can craft the term sheet. Now, the other reason to build the term sheet is you want to be really clear when you're talking with potential investors what it is you're asking for. How much money? Is it a convertible note or is it a safe note? Are you selling preferred shares? Are you selling straight debt? What are you offering in exchange for their money? And the structure, the term, the timing of that entire deal is very important to think about now, because the last thing you want to do is be sitting in front of a bunch of investors and have them say, sure, we'll consider this investment. What's the valuation, or what's the term of the convertible structure that you're offering? And if you don't know that answer, you're going to look really silly and you're going to probably ruin that relationship. Okay, everybody, hopefully this post will help you start to think about the problems you're having right now raising capital and fix them. These top 3 things that you need to fix, you can get moving on right now. As always, if you like this post, click the subscribe and the thumbs up button. We'll continue to give you really awesome content on how to start a business, fund your business, and save and make a lot of money.